Hello and welcome everybody. Welcome to the Texas REIAs. The Texas REIAs is the largest network of real estate investor associations in the great state of Texas, with over 100,000 members, participants, and attendees going all the way back to 2003. We have a very special meeting tonight. We're going to do a commercial real estate presentation. We're also going to do a market update right now by sharing with you what's going on in the real estate market. So what's going on in the market? The Texas REIAs has been here since 2003. We provide data, including market data, to tell people what's going on in the marketplace. So what is the big story with the marketplace? Well, if you wanted to just summarize it in an info chart, here is that chart. The average price house in the great state of Texas is $405,000. From 1 year ago, it is up a tiny bit, 2.7%. The median price in the state is $328. From 1 year ago, it's up 1%. So if you wanted just one data point, if you were just looking at one data point, one number to kind of give you an idea of what's going on, I would say this is the number that you would want to look at. Months of inventory. What is months of inventory? Well, the best way to explain that is as follows. If you took all the houses for sale in the MLS and you stopped adding any more, we're not going to add any houses. We're just going to sell the ones that are for sale and then not add any more. The question is, how long would they last? How long before the last house sells? How long until the shelves are empty? How much inventory do we have until they're all sold? And the answer is 4.4 months. Now, let's put that into perspective. They say if there's less than 6 months of inventory, you have a seller's market. If there's more than 6 months of inventory, you have a buyer's market. If there's right around 6 months of inventory, you have a neutral market. We are in a seller's market. We have been in a seller's market for years. We never got to a buyer's market. We'll talk about that in a minute. Now, that being said, a year ago, there was 3.5 months of inventory, which I would describe as a hot seller's market. And I would describe 4.4 months of inventory as a lukewarm seller's market. But don't forget, it's a seller's market. This is both, all houses for sale, right? And we'll talk about that too in a minute. But let's look at the history. 2021, prices in Texas went up 18% in 1 year. 2022, they went up another 10.7% in 1 year. And then 2023, they flattened out. So they went way up, they went up some more, and then they flattened out. 2024, they stayed flat almost the whole year. And at the end of the year, they started to come up a little bit. So what is the change? We had the pandemic, right? But here's a couple things. You know, the economy does not affect real estate. Supply and demand affects real estate. Okay. During the Great Depression, real estate prices went down a whopping 6%. During the Great Pandemic, real estate prices went up almost 30%. It's not the economy, it's supply and demand. So what happened with supply and demand? Well, the only substantial thing that happened after the pandemic is interest rates went up. And when interest rates go up, what happens? Houses are less affordable. So demand goes down. Fewer people can afford them. So normally when demand goes down, prices go down. But we had an offset. What is the offset? Normally 2/3 of houses that sell are resale houses and 1/3 are new construction. Right now it's inverted. Nobody's selling their house because they got a mortgage for 3% and they don't want to give it up. The economy's doing pretty good. Right now, by any historical standard, people should be saying, hey, honey, let's buy a bigger, nicer house. But they're not doing it. Why? Because they got a 3% mortgage and they don't want to give it up. So yes, the demand came down, but the supply came down. And when the demand and the supply both came down, that's why prices didn't go up. They didn't go down. They just flattened out. Because what?
Because their interest rates double.
Yeah, they're less affordable. That's exactly correct. But my point is, it's not so simple to say interest rates went up and prices go down. They didn't go down. Why didn't they go down? Because yes, demand went down, but supply went down. And because they both went down, prices are flat. Okay, but there's other things driving the market. We're going to talk about the other things that are driving the market as well. Prices stayed flat through 2023, most of 2024, and at the end of 24, they went up a little bit. Why did they go up a little bit? Because what happened at the end of 2024? Interest rates came down a little bit, right? Not a whole lot. So I'll give you one city. Let's do Dallas. Average price house in Dallas, $485, up 2%, about the same as the state, although more expensive. Dallas is the second most expensive after Austin. Median price in Dallas, up 1%, $390. Months of inventory, 3.4 months of inventory. Dallas is the hottest real estate market in Texas. And I'll tell you something about Dallas. Going back 20 years, we tracked this. It's always been the bellwether. I don't know why. But Dallas is always first to go up, first to go down, first mover, right? And it is the hottest market in Texas, 3.4 months. Prices in 2021 went up 20%, 2022, 15%, 2023, flat. We're up 1%, up 2%, which is basically flat. Lease prices are even up a little bit. Right? People either have to buy a house or they got to rent an apartment. Why are lease houses up? When leases are up, does that mean the apartment buildings are full or apartment buildings are empty? They're full. They're full. And there's a reason they're full. So we'll talk about that too. So what drives the market? Market drivers. Talk about the market drivers. Overall, the economy doesn't drive the market much. It doesn't drive the market much. But the economy is doing okay. And, it indirectly drives the market because when people feel like they're making money in their IRA, they're making money in the stock market, they're keeping their jobs, right? They're a little more likely to buy real estate. So that's the connection between the economy. Housing affordability, interest rates, all right, they went up, right? They went up. So that's driving the demand down. House price trajectory is flat. It's not up, it's not down. It's actually flat. Housing supply, active listings is flat. Months of inventory is low. We don't have enough inventory. In fact, on a national basis, do you know that we're in the middle of a housing shortage? Who's heard of this? Yeah, we actually have 6 million fewer houses than we need for everybody who needs a place to live, right? And that's driving prices up. House price trajectory, permit trajectory, we're not building enough houses. Construction, we got a major construction problem. General contractors, they're getting older and older and they're not getting replaced. The average general contractor is like 58 years old. So if you have a teenager, here's some advice. Don't send them to college. Buy them a hammer, okay? I know plumbers making $1 million a year, guys. Seriously. Contractors are making fortunes. Make them a contractor. They'll make way more money. They'll have no student debt. They won't work for some jerk, right? So it's better life in so many different ways. Housing demand, closed sale trajectory flat, pending sale trajectory flat. Everything's just flat. Up, down, a little bit, basically flat. But here's probably the biggest bullet on the page. This should be like 5 times the size of everything else. Migration. What is migration? Migration is the ratio of people moving in versus moving out. Last year, California lost 500,000 people. Last year, Texas gained 500,000 people. Where do you think they went? Yeah, there's another 10 million people we don't know where they went, but a bunch of them are here too. And they all need a place to live. And we're not building enough houses. So even when interest rates went up, all these people are having babies or moving to Texas. We got a huge migration. We're not building enough houses. We're in a housing shortage. And that is why the market never corrected. So if you're waiting for some big correction, that was probably it. So I'll give you a quick forecast. And, we get all this data, by the way, from the Texas A&M School of Real Estate. We've been doing forecasts for years. It's not that hard to do. Forecasting the economy is very hard. Forecasting the stock market is not possible. Forecasting real estate is not very hard. And the reason it's not very hard is because we know almost everything we need to know. It's supply and demand. We know how many houses we have. We know how many houses we're building. We know how many people live here. We know about how many people are moving here. We know how many houses we're going to have. We know how many houses we're going to need. We know everything. The only thing we're not 100% sure of is exactly what the interest rates will do and a couple of other things that don't matter as much as the things that do matter. But, and we're not here. I mean, there are people that have a motivation. Oh, it's going up. Oh, it's going down. You know, when it's going up, we say it's going up. When it's going down, we think it's going down. We have strategies for up and down and sideways. But I'll tell you our forecast, it's not going anywhere, right? We're kind of at the bottom of the market. Didn't have much of a bottom. Interest rates will probably fall a little bit this year. That's what the experts are telling us. And this should create a very modest rebound. We expect sales to be up about 2% this year and prices to be up about 2% this year. We don't really expect anything major to happen. It's a very normal interest rate, right? It's not high. Low. Most of my mortgages are 20 years old, 6.5%, 7.5%. By historical standards, that's normal. 3% is not normal. That never happened before. That's not normal. 6% is normal. You know, right now the market is a great market. Why? Because it's normal. Right? Sometimes it's easy to buy and hard to sell. Sometimes it's easy to sell and hard to buy. Right now, it's not hard to buy. It's not hard to sell. And I love that. You know, a few years ago, people were like, oh, the real estate market's on fire. It was impossible to buy. So yeah, it was on fire. Easy to sell, but impossible to buy. You want to be playing when it's not that hard to buy and it's not that hard to sell. And that's exactly the market we're in right now. So I love this market.